Hello everyone, welcome back to my sessions on company final accounts. Dear students, today I am going to present a very interesting and important topic, preparation of company final accounts with managerial remuneration, dividend, provision for tax and dividend tax adjustments. Session outlines: the provisions for treatment of dividend and dividend tax, provision for income tax, and illustration on dividend tax, provision for tax and managerial remuneration adjustments in preparing company final accounts. So related to dividend, keynotes: dividend is a part of divisible profit of the company which is distributed among its shareholders. This is a profit which is available for distribution of dividend to shareholders. There may be interim dividend or final dividend. Sometimes it may be called a proposed dividend, then preference dividend. And one more important item to be considered in this concept, that is corporate dividend tax. It is always payable by the company. The present applicable rate of corporate dividend tax is, basic rate is 15%, and on that we have to add surcharge at 12% on that 15, so it will be rupee 1.80, and again on that we have to add education cess at 3%, that is on 16.8, 15 plus 1.80 is there now. On that we have to add charge 3% education cess, and which will become 0.504. Then total corporate dividend tax will be 17.304%. So based on this background, now let me go for a problem. So the trial balance is given of Praveen Company Limited as on 31st March 2020, and from that we have to prepare the statement of assets and liabilities and statement of profit and loss. Here the trial balance is given, as well as they were provided the information about the adjustments. And as far as the preparation of final accounts are concerned, you know that first of all we have to group up the items related to a particular notes. So in order to prepare the note, the grouping of items is very important. So for that sake, let me start for grouping of the items given in the trial balance first. Cash in hand is a cash and cash equivalent item. Loans and advances to staff is a short-term loans and advances. Building, machinery, these are the tangible fixed assets. Preliminary expenses is an item of reserve surplus now. It's an unwritten off expense it is. Furniture, tangible fixed asset. Opening stock and purchases are to be taken under cost of that is materials consumed. Then audit fees is a other expense. Income tax paid is to be subtracted in provision for tax and under the note short-term provisions. Then debtors is a trade receivable. Interest on debenture is a finance cost. Managing director's remuneration is a employees benefit expenses. Director's fees is other expenses. Printing and stationery, selling expenses, these are also the other expenses. Investments is a non-current investment. Salary is a employees benefit expenses. Likewise, now let us come to the credit balances. Here the share capital, equity shares and preference shares are given. So authorized, issued and paid up we have to group in such a way that in the share capital note we have to divide these equity and preference shares with authorized, issued and paid up separately. And next item, that is dividend equalization fund. It's an item of reserve and surpluses. Bank overdraft is an item of short-term borrowings. General reserve is a reserve and surplus. Sales is to be taken under the note revenue from operations. Profit and loss is to be taken, this is the opening balance of profit and loss, so it is to be taken under the note reserve and surplus. Creditors is a trade payables. 10% debenture is a long-term borrowings. Interest on investment is a other income. The unclaimed dividend is given in the credit side of the balance, trial balance, that is to be taken under the note other current liabilities. Now come to the adjustments. Regarding adjustment, there provided information about the closing stock. It is to be taken. So first of all, let me tell about the adjustments. So there is a rule that each and every adjustment is to be effected twice. Once in the statement of assets and liabilities, and again in the statement of profit and loss. So first of all, here the closing stock, first of all we have to adjust in the cost of materials consumed, and then we have to take it to the inventories under the statement of assets and liabilities. Then salary outstanding is an item of employees benefit expenses, and is also to be taken under other current liabilities. Then make provision for bad debts is there on debtors. So it is first to be taken under other expenses, then we have to adjust it in the trade receivables. The rate of depreciation, so it is to be adjusted twice in depreciation and amortization note, and in statement of assets and liabilities it is to be taken under tangible fixed assets. Then managing directors remuneration, there is an adjustment. First it is to be taken under employees benefit expenses and is also to be considered in case of other current assets. Then there is a transfer of rupees 30,000 to general reserve. It is adjusted in the reserve and surplus note twice. Once it is to be added to the general reserve, and again it is to be appropriated in surplus of the current year and the last year. Then directors have recommended dividend at 15% to equity shareholders. So once it is to be taken under reserve and surplus, then it is taken under shorter term provisions. Then provide for income tax at 30% of profit. So regarding this item, first of all we have to take it under tax expenses, and then we have to consider it in note shorter term provisions. And there is a new item 15% for dividend tax to be provided. First of all it is to be considered in case of reserve and surplus for appropriation, and then to be taken under shorter term provisions note. So in this way we have to group all the items given in the trial balance as well as in the adjustments, and based on this grouping let me go for preparation of notes to that statement of profit and loss first. So first item to be taken here, the revenue from operation, sales, just we have grouped there, sale is to be taken here, only one item is there. Other income, it covers one item, interest on investments. Then cost of materials, so the common formula for this, opening stock, add purchases, then closing stock. Opening stock and purchases are given in the trial balance at the debit side, then closing stock is given in the adjustment, so that is to be subtracted. Then employees benefit cost, regarding this note will be incomplete without calculation of MD remuneration, because one adjustment is there for managing director's remuneration. So it will be completed only after completing the profit and loss statement. So first let me take available information. As per available information, salaries is to be taken from the trial balance. Then outstanding salary is there of rupees 5,000, which is given in the adjustment. Then director's fees is given in the trial balance, that is to be taken here. Then MD remuneration will be taken later on. Then finance cost, regarding it only one item is given, there is only interest on debenture. Then depreciation and amortization, regarding this adjustment is given. There are three adjustments related to the depreciation on building, on machinery and on furniture. So those are to be taken here as just we have worked out in the grouping of items. Then other expenses, there is an adjustment on provision for doubtful debts at 4%. So that's on debtors is to be charged. Then audit fees, printing and stationery, selling expenses, these are the items given in the trial balance at the debit side. Those items are to be taken here. Then tax expenses. In adjustment they are provided the information about the provision for income tax at 30%, and that is to be charged on the profit. So now let me just before going to an preparation of profit and loss, one important item is left, that is the employees benefit cost. It's not, this note is not completed still. Now let me calculate first MD remuneration based on the available information from notes to statement of profit and loss. So here revenue from operation is just we have got, that is 8 lakh. Other income under note number 2, it is 6,000. Total revenue is 8,06,000, and from that we have to deduct all the expenses except MD remuneration. So cost of materials consumed as per note number 3 is taken. Employees benefit cost, it's except this employees benefit cost is to be taken except MD remuneration. So that is to be taken here. Then finance cost, depreciation, other expenses. So by summing up for all these expenses, we got 6,77,000 as expenses, and these are to be deducted from total revenue before adjusting the EMD remuneration. That is remuneration available for calculating EMD remuneration is 1,29,000. This is the profit available. Then on that, in adjustment they have provided the information, charge 10% as the EMD remuneration. So it will become 12,900. And as far as the MD remuneration is concerned, that is to be taken under the note number 4 here as MD remuneration 12,900, then total will be complete. So based on these notes, now we have to prepare the statement of profit and loss. So first of all, for continuing operations, revenue from operations from note number 1, we have taken the amount 8 lakh. Other income 6,000 from note number 2. Then note number 3 for expenses, there is a cost of metals consumed, then employees benefit cost, finance cost, depreciation and amortization, other expenses. These items are the expenses which are to be extracted from the notes to statement of profit and loss. The total expenses is considered as a B, and from total revenue we have to deduct total expenses, then we will get profit before tax. Then it will be 1,16,100, and from that we have to subtract the tax expenses rupees 34,830, which we extracted it from note number 8. Then profit after tax is 81,270. Then after this, let me go for statement, that's notes to statement of assets and liabilities. First of all, we have to take the share capital, then reserve and surplus. The important note is reserve and surplus only. Here first, as given in the trial balance, dividend equalization fund is taken, general reserve is taken. Then to that we have to add transfer from profit, that is transfer to general reserve. So it is given in the adjustment, so that is added. Then after that we have to take surplus. Under that last year profit, to that we have to add current year profit, just we have got in the statement of profit and loss. And after adding that we have to go for appropriations. Regarding appropriations, they were clearly given in the adjustments. Preliminary expenses is to be paid rupees 10,000, transferred to general reserve, proposed dividend on preferences, on equity shares. These are the information given in the adjustment. Likewise, tax on dividend is also given. It is always taken at a 17.304 as presently applicable rate of corporate dividend tax. Then total of appropriation is 86,922 that is to be deducted from the current year and last year profit. Then we will get the amount, and that appropriations is to be deducted from the reserves, and we will get the balance of reserve and surplus, which is 1,66,348. And after that we can move towards the long-term borrowings. Only one item is given. Then short-term borrowings, there is a bank overdraft. Under trade payables, there is only one item, creditors. Then other current liabilities is having two items. One is outstanding salaries and another is unclaimed dividend. Outstanding salary is given in the adjustment. Then unclaimed dividend is given in the trial balance. Then short-term provisions. Regarding this, provision for tax is given in the adjustments, rupees 34,830 it will become. Then out of that we have to deduct the tax paid. It is given in the trial balance. So there is an excess of rupees 14,830. There is actual tax paid is less than provision for tax. So the balance is to be taken here, rupees 14,830. Then proposed dividend, tax on dividend. So after all these we will get the shorter term provisions. The non-current investment concerned with the investments, rupees 1 lakh. Then there is a tangible assets, building, machinery, furniture. It is to be adjusted with the given adjustment. There is a depreciation adjustment, and the total is taken to the statement of assets and liabilities. Then under inventories we have only one item, stock. Then trade receivable is having one trial balance item and one adjustment item. So adjustment item is provision for doubtful debts, that is to be subtracted from the debtors, and the balance is taken to the statement of assets and liabilities. Then cash and cash equivalent is having one item, is cash in hand. Then short-term loans and advances is having one item in the trial balance, that is loans and advances to staff. Then other current assets is covered with one important item, that is EMD remuneration. Actually EMD remuneration paid is 20,000, but payable is 12,900. There is an excess of rupees 7,100 paid, that is considered here as other current assets. So based on this we can prepare the statement of assets and liabilities as per prescribed form. Equity and liabilities are to be taken from the notes. Current liabilities are to be taken from the notes. Just we have prepared, these are the assets and these are the current assets, non-current assets and current assets. So just we have to insert the amounts which are available in the notes. And throughout this session we have dealt with the dividend, corporate dividend tax, and we have prepared one illustration. Thank you, friends.